Welcome back to the channel. Today we're diving deep into Zoom Communications' third quarter results for fiscal year 2026. This is the quarter ending October 31st, 2025. While many know Zoom from the pandemic-era video calls, the company is now betting big on artificial intelligence and enterprise solutions. We'll break down their financial performance, discuss their partnership with NVIDIA, analyze customer metrics, and look at what management expects for the future. Let's get started. Let's start with the top line. Zoom reported total revenue of $1,229.8 million for the third quarter. That's up 4.4% year-over-year. When you adjust for foreign currency fluctuations, the constant currency growth was 4.2%. Now, this growth might seem modest, but it's important to understand the composition. Enterprise revenue, which comes from their direct sales team and partners, reached $741.4 million, growing 6.1% year-over-year. Online revenue from customers who subscribe directly through their website was $488.4 million, up 2% year-over-year. Now, let's talk profitability because this is where Zoom really stands out. GAAP operating margin came in at 25.2%, while non-GAAP operating margin reached an impressive 41.2%. GAAP net income was $612.9 million, or $2.01 per share. That's a massive increase of 204.5% year-over-year. Non-GAAP net income was $462.8 million, or $1.52 per share, up 10.1% year-over-year. The company generated $629.3 million in operating cash flow, up 30.2% year-over-year. Free cash flow margin was 50%. Zoom's balance sheet remains incredibly strong. As of October 31st, 2025, the company held $7.9 billion in cash, cash equivalents, and marketable securities. This excludes restricted cash. This war chest gives Zoom significant flexibility for investments, acquisitions, and returning capital to shareholders. Speaking of which, the company repurchased approximately 5.1 million shares during the quarter, bringing total repurchases under the current plan to 32.5 million shares. In November 2025, Zoom's board of directors authorized an additional $1 billion for share repurchases. This is on top of the $310.4 million remaining from the previous authorization as of October 31st. The company stated that repurchases will be funded using working capital, and any repurchased Class A common stock will be retired. This shows management's confidence in the business and their commitment to returning value to shareholders. The timing and amount of repurchases will depend on market conditions and management's evaluation. Let's examine the customer metrics. Zoom ended the quarter with 4,363 customers contributing more than $100,000 in trailing 12-month revenue. That's up 9.2% year-over-year. This is a key metric because these large enterprise customers represent stable, high-value relationships. The trailing 12-month net dollar expansion rate for enterprise customers was 98%. This means that existing enterprise customers are spending roughly the same amount year-over-year, showing stability but limited expansion opportunities at present. For the online segment, average monthly churn was 2.7% for the third quarter, flat year-over-year. This suggests customer retention remains stable in this segment. Interestingly, 74.4% of total online monthly recurring revenue came from customers with a continual term of service of at least 16 months. That's up 30 basis points year-over-year. This indicates that once customers stay beyond the initial period, they tend to remain sticky, which is positive for predictable revenue. Now let's discuss what might be the most significant strategic development. On October 28, 2025, Zoom announced a major partnership with NVIDIA. Zoom is integrating NVIDIA Nemotron models into their AI Companion 3.0. This partnership enables what Zoom calls a federated AI architecture, where they can intelligently route queries between small language models optimized for specific tasks and large language models for complex reasoning. Zoom developed a 49 billion parameter large language model based on NVIDIA Nemotron using NVIDIA Nemo tools. This hybrid approach aims to balance speed while accuracy. The AI Companion is being enhanced with enterprise retrieval augmented generation capabilities, allowing it to work seamlessly with Microsoft 365, Microsoft Teams, Google Workspace, Slack, Salesforce, and ServiceNow. According to CEO Eric Yuan, they're seeing meaningful growth in AI Companion adoption, and it played a role in some of their best customer experience quarters. The company is targeting industries like finance, healthcare, and government, where data privacy is paramount. Zoom emphasizes they do not use customer audio, video, chat, or other communications to train their AI models. CEO Eric Yuan stated that Zoom is building on their vision of an AI-first platform that helps people connect and collaborate more seamlessly. He highlighted strong momentum with Custom AI Companion and their AI-first customer experience suite. Management noted this was one of their best customer experience quarters, with broad AI adoption across major deals. The company's disciplined approach is described as fueling top-line growth, strong profitability, and lower dilution, turning AI innovation into value for customers and shareholders. Looking ahead to the fourth quarter of fiscal year 2026, Zoom provides the following guidance. Total revenue is expected between $1 billion, $230 million, and $1 billion, $235 million. Revenue in constant currency is expected between $1 billion, $224 million, and $1 billion, $229 million. Non-GAAP income from operations is expected between $477 million and $482 million. Non-GAAP diluted earnings per share is expected between $1.48 and $1.49, with approximately 305 million weighted average shares outstanding. For the full fiscal year 2026, management updated their guidance. Total revenue is now expected between $4 billion, $852 million, and $4 billion, $857 million. Revenue in constant currency is expected between $4 billion, $844 million, and $4 billion, $849 million. Non-GAAP income from operations is expected between $1 billion, $955 million, and $1 billion, $960 million. Non-GAAP diluted earnings per share is expected between $5.95 and $5.97, with approximately 308 million weighted average shares outstanding. Full-year free cash flow is expected between $1 billion, $860 million, and $1 billion, $880 million. Let's summarize the key points. Zoom delivered solid financial results with revenue growth of 4.4% and exceptional profitability margins. The enterprise segment continues to grow faster than the online segment. Cash generation remains extremely strong with over $7.9 billion on the balance sheet. The company is aggressively returning capital through share buybacks with a new $1 billion authorization. The NVIDIA partnership represents a significant strategic bet on AI. Management is seeing positive traction with AI companion adoption, particularly in customer experience use cases. The guidance suggests continued steady growth with strong margins. There are several factors to consider. The 98% net dollar expansion rate shows enterprise customers aren't significantly expanding their spending. Revenue growth remains in the low single digits, which may not excite growth investors. The company faces intense competition from Microsoft Teams, Google Meet, and others. The success of the AI strategy is not yet proven and will take time to materialize. Foreign exchange headwinds continue to impact results. Management notes risks including macroeconomic conditions, geopolitical tensions, and potential lengthened sales cycles with large organizations. The company's forward-looking statements acknowledge numerous uncertainties. That wraps up our analysis of Zoom's third quarter results for fiscal 2026. The company is transitioning from a pandemic beneficiary to an AI-focused enterprise collaboration platform. The financial health is undeniable with strong profitability and cash generation. Whether the AI investments will reignite growth remains to be seen. If you found this analysis helpful, please like and subscribe for more earnings breakdowns. Remember, this material has a purely educational character and does not constitute an investment recommendation. Always do your own research before making any investment decisions. Thanks for watching, and I'll see you in the next one.